This may shock you on what AI said about this investing portfolio. Hey, what's good? I'm Royal. Welcome to Royal's Mindset. And in this video, we're talking about risk versus reward investing and why boring works when it comes to investing in stocks. I think we often overcomplicate on how simple investing could be. The ideal is you start as early as possible, you invest as much as possible, and before retirement, you'll have a nest egg and a huge portfolio working for you in your favor. But it's also in our human nature to try to outbeat the market, right? Try to outperform the market. And I think this is where we go wrong. So I found an interesting post on our Blossom community. If you're not familiar with Blossom, you definitely want to download the app. Here is a post that somebody publicly posted, and I wanted to share just two short paragraphs of what not to do. So I guess this member asked AI to critique his dividend investing portfolio, and this is what AI told him. Check it out.
All right, gloves off. This isn't a portfolio anymore. It's a suicide bombing strapped to a dividend statement. You borrowed 53,715 Canadian dollars. That's like 12 maple syrup-powered hockey rinks worth of debt, at 4.45%. So you can own a traveling circus of leveraged trash compactors that pay you to watch them eat their own NAV. That's not investing. That's hiring a stripper, paying her in your own credit card, and calling the lap dance passive income. Your risk management is literally vibes and dividends. One 2022 style volume spike and your broker is going to liquidate you. So fast, the transaction confirmation will arrive before the push notification that you're broke. You'll go from $2,300 monthly tendies to $53,115 in one glorious red candle. Quicker than a crypto influencer pivots to AI tokens. This isn't a portfolio. This is a live-action reenactment of the 1929 margin crash. Except instead of jumping out a window, you'll just refresh the app and whisper, "When Lambo," through the tears. You magnificent, degenerate, zero-equity, dividend-jacked, leverage-lord mad lad. I hope your next monthly payout buys you the world's tiniest violin, because when this detonates, the symphony is going to be glorious.
If you're not a part of our Blossom community, growing super fast, it's just like Instagram, but better because it's only for investors. Be sure to download the Blossom app today. Link in the description. Statistically proven, most people cannot outbeat the S&P 500. So wherever you are in your investing journey, it's most safe to invest most of your holdings in the S&P 500, which is the market's minimum standard. And that's what most people try to outbeat. Make sure you got S&P 500 exposure, and then you can add some more risk on top of that. So don't forget, you're actually buying companies. You're not just buying ticker symbols that fluctuate up and down. You're buying real companies that make real products, that have real solutions in this world, and that offer value to the marketplace. So remember that you're buying real companies that create real products that generate real business and income for us investors. If you want to see my full portfolio, make sure you download the Blossom app. Keep it simple. Investing is boring. It can be absolutely boring. Buying dinosaur companies that will continue growing their income, that has continued paying out. Keep it boring. Keep it simple. You want to be very careful when making your selections with the ETFs and stocks that you choose. Know that individual stocks are a little bit more riskier, and the higher the yield, the more volatile that payment could become in the future. You don't want to buy these dividend traps where they're super high yields and the NAV erodes. All right. So be very careful. Make sure you do your due diligence and your homework on everything you invest in, because investing is your responsibility at your own risk. This is for entertainment purposes only. Be sure to do your own due diligence. Join the community, join the conversation, learn how to build wealth one share at a time. And if you enjoyed this video, make sure you stick around for this next one.